Welcome back to Everything Money. In this video, we are talking about Lockheed Martin. The stock got smoked yesterday, and we'll tell you why. We will show you the financials behind this company. We will use our 8-pillar analysis and to look at the company as a whole. What do they make? What are they doing? How about their shares? Do they have debt? And we will translate these facts into a stock price. Paul, big move on the stock. We'll show you why. We will also head over to Mo. He will go over the trading charts. If trading speaks to you, he will show us what happened yesterday and how we can take advantage of it. But first, who are we? Why are you watching this? I bring your normal person questions to a couple wealthy guys that maintain $100 million in their portfolio filled with real estate, stocks, and multiple businesses. I like to surround myself with some wealthier guys. I want to get to their level, and we'll show you how investing in a company perhaps like Lockheed Martin. Paul, what the heck happened yesterday? And Mo, tell us what's going on. A 10-12% drop. This is bonkers.
All right, so first off, guys, follow us on Instagram. We have a new Instagram account for the channel, and follow our personal accounts. So guys, this is our exclusive Everything Money software, and we use this to get our news as well as to look at individual stocks. So we click 8 pillars, we type in Lockheed Martin, click on it. I'm gonna go to the news section first. Lockheed clips revenue outlook on supply chain woes. Interesting.
Yeah, so they had their sales came in a little lower than expected, and then also they are doing a 5-year reassessment, so people are getting nervous about their future.
Oh, wow. Okay.
Yeah.
Sounds good. Okay, so let's go to our 8-pillar analysis. What this is we can figure out the 8 pillars that we use to look at stocks. We put it in the software. So to start, market cap. $94 billion market cap. Our first metric is we want the 5-year PE ratio to be less than 22.5. And it is. It's 17.4. Check mark there. The next pillar, we want the 5-year return on invested capital to be greater than 9%. And it is. What this means is they do a good job of investing their capital within their business through equity and debt. Big pluses. Now, Sethi, look at their dividend yield here. 3% dividend yield that we have here on the software. Pays out $2.86 billion. Yeah, very nice. Because the market is about 1.2 or 1.3% dividend. Now, the key here is, though, everybody assumes a dividend is safe. Not necessarily. What we do here in the software, this is why we add free cash flow up here right above, so you can compare their dividends to their free cash flow. It looks reasonably safe, okay? They're paying out about, 60, 70, 65% of their cash flow is paid out in dividends. Not terrible, not low, not too high. I wouldn't say this is ultra secure, but it's probably not changing anytime soon. With these results they may have had, maybe they'll want to reinvest back in themselves, but either way, we have 2 check marks to start. Our next pillar, revenue growth. $49 billion to $66.8 billion, check mark there. So they have some revenue growth over the last 5 years. Pillar number 4 is net income growth. $5 billion to $7.14, check mark. So guys, so far, does anything here sound like a company that should be down 10% today?
Not yet, no.
So they missed earnings. Now remember, guys, our outlook is to look long-term. We want to take advantage of these big drops because what it does is people say, oh, you missed this one thing. Imagine it's like getting divorced because of one fight. That's the way I look at this right now.
It's a 6.3, they missed by 6.38%, Paul, in quarter 3.
6.38% of what, revenue?
Yeah, revenue.
What was it? Give me the actual numbers.
I'd have to look. Keep going.
Look it up. Pillar number 5, guys, is a silent killer. This is the most overlooked, but one of the most important metrics. Shares outstanding. Are they buying back shares? Are they increasing shares? We want them buying back shares. And the reason being, when they buy back shares, they give existing stockholders a bigger piece of the pie. They're now splitting the revenue and profit up by less shares. 5 years ago, they had 288 million shares outstanding. Now they have 277. Check mark there. Not by a ton, but they're still decreasing their shares outstanding. Now, balance sheet, guys. One of the things we do here, we want to look at their 5-year average free cash flow on our main page of our exclusive software. We want to multiply it by 5, and that's $23 billion. We will then go to the balance sheet. We want their long-term liabilities to be under $23 billion. Why is that? Because companies with less debt stay around longer. Less debt is better. So we go to the balance sheet, scroll to the bottom, 30.33, that's a lot of debt. That's an X right there, guys. Does that mean it's a no-go? Not necessarily. Every industry is different. Every business is different. Some can justify really high levels of debt. For example, a retail outstore that has a lot of leases in place, that's a lot of debt. But 30.33 for a company like this does seem high.
They expected 17.1 billion in revenue. They got 16 billion.
Wow, that's a big miss.
Big miss.
Yeah. Now, is it 10% miss? I don't know. Should the company be 10% off because they missed by $1 billion? I don't know. That seems a lot.
Pillar number 7 is free cash flow growth. We want this growing.
So guys, free cash flow is cash from operations less your capital expenditures. Our software does it easiest for you. Other software just shows you free cash flow elsewhere. I put it on the cash flow statement, add the line here, make it easy for you. 4.13 to 4.97, that's a check mark. Our final pillar, we take the 5-year average, which we put right here, multiply it by 20. We have $92 billion market cap. What's the current market cap?
94 billion is the current.
So it's an X, barely. Now, guys, what does this all mean?
Tell me, baby.
We go to the 8 pillars tab. It gives us all these X's and checks and blah, blah, blah. Does this mean you buy it? No. What it means is, do you feel comfortable? I'm seeing this. I feel comfortable going further. I'm going to use our stock analyzer tool to then input assumptions about the growth of the company and decide what to pay. It'll tell me how much I pay for the company. And we created this specifically because our users liked our process and said, hey, how do we do this without having your expensive $200 to $500 a month software? So we created this. But in addition to the software and everything you see, you get exclusive daily content, 2 videos a day. You get a chat with 6,000 other members of our community who pay for the software where you can talk about every type of investment out there, including crypto. We get exclusive access to Mo, Seth, and I, well, obviously to all 3 of us. And we're adding more and more every single month to the software. This is all still coming to our software. This is a no-brainer, guys. It's only 90 cents per day. So if you're serious about your financial future, you would sign up for this for 90 cents a day. Even making 1% or 2% extra per year on your investments will yield you hundreds of thousands, if not millions of dollars, just by saving a few $100s a month.
Stay tuned. We will show you to see what people were doing trading this with Mo here in a minute. But Paul, pull up that stock analyzer tool and show us what we should be paying. This is the final piece of the puzzle. How do we translate all this mumbo jumbo into a stock price? You know, it's tough to come up with a number, and show us how.
So guys, this stock analyzer tool first starts with, give me years of analysis. I always usually put in 7. Number of assumptions. Now, I can do 1, 2, or 3 levels of assumptions. I usually pick 2 for more established businesses. Now, as you can see, guys, it gives me the revenue. It gives me all my metrics over the last 1, 5, and 10 years. So my goal on the low side is be conservative. High side, be a little more aggressive. So I look at the last 10 years. I'm going to assume 3% revenue growth on the low side and 6% on the high side. Share change. I'm going to assume negative 0.5 on the low side and negative 2% on the high side. Profit margin, 8 to 10. Free cash flow margin, 7 to 8. PE. I always like doing, for established businesses, something like this. And then for desired return, guys, I always pick 12.5%. Now, somebody would ask me, why 12.5%? Well, you can invest in an ETF and get 10% over a long haul. So why buy an individual stock unless somebody gets some reason to buy it, which is a higher return? I hit the analyze button. The stock is currently 338. And guys, it's basically telling me here, it's basically on the high side where it is. I'm not a buyer of the stock right now. Even though there were 6 check marks out of 8, I'm not a buyer. Because I'm looking at the stock price going, the low side's 220 or so, the high side is 380. So it's probably somewhere in the middle, probably around $300 a share is what I want to pay for the stock. Very simple. Now, I can change my assumptions here. If you think my assumptions are wrong, go change them. Go put in 5 and 7% revenue growth and watch the change. Okay, much better stock price, but it's still overpriced unless you really believe in this high level. So guys, this is how you use the software. It's only 90 cents a day. Go to everythingmoney.com or Patreon and sign up either way. The benefit of everythingmoney.com is there's no sales tax and you don't get double charged in the first month, but do whichever one makes you feel comfortable, 90 cents a day. Mo, did
people in the bid and ask catch this falling craziness yesterday, 2 days ago?
It was this morning, but there's a lot of people that were trading it this morning. I saw, but I drew this really slight dashed line in here, and I put that in there because I think that's the level that this can turn to. So this is part of the Employee Trader series. We were hoping for a little move up to the upside, and that didn't happen. So eventually, probably later today, this stochastic is going to turn down, and our long-term trade on this one is over. But I think that this could become a short if you can run this thing down about $320 a share. It's $332 right now. Now let me go over to the daily chart where you can be a little bit more active. You're under all 4 major moving averages. You have a really good downtrend coming right now. Hey, if you get an engulfing candlestick down tomorrow, I would let this thing calm down, and then I would jump into this tomorrow. This is a great looking trade. And if this volatility keeps up, it's down 12% right now, go and day trade it. Use a 15-minute chart and short this thing. I just gave you all 3 ways that you can go and attack this stock. So if you like this style, come and join the Bid and Ask Nation. As I said, you get the Employed Trader series, which I talked about, the Trading 101 series, all of my monthly seminars, access to me daily, access to the 900 people, other traders that are in the community. The Bid and Ask Nation is the place to come if this speaks to you.
Final take, Paul. Lockheed Martin.
I'm waiting. I mean, it's a great company. It's driven by government, which I don't really like a lot. I mean, it's live or die by the government contracts. So unless I would want a bigger margin of safety here, I'm probably looking to buy it on the low end of our price target, probably closer to 230, 240. Call that conservative. I just don't want to put my belief, my investment based on something that can change based on every election. So that's my take.
If this speaks to you, fondle the thumbs up and watch more of our videos. We'd love to have you. Stay tuned as we analyze stocks and moving forward. And yeah, we love that you watch. See you next video. Fondle that thumbs up, as I always say. And those people in the Bid and Ask, I love you. Keep that Bid and Ask tight. See you guys.